What's going on, guys? Lewis here from JAG Insurance. I'm actually sitting in with our other media team member, one of our other media team members, Juan, and we're going to break down the distribution of insurance for you guys. Now, it's pretty unusual this coming from the media team, but taking it that we've been, recording the guys and a lot of our staff over the years, or over the months rather, over the last year and a half per se. We've acquired some knowledge, so we want to see if all that knowledge that they showed us, we can regurgitate it, and if there's any retention there, right, Juan? But yes. Juan does have a leg up because of the fact that he was a tech prior to joining the media team. Juan, why don't you talk a little bit about that, and then we'll just dig in straight into the subject. Distribution of insurance, how consumers get to the end goal, right?
Correct.
How they get their insurance. It goes from the top all the way to the consumer. So we're going to just briefly, in a nutshell, break that down for our viewers here.
Correct. So it was a tech, which basically means I just did all the back end stuff. I wasn't quoting policies, but I was in contact with clients, kind of, if they needed a change in their policy, I would help with that. If they needed to file a claim, I would kind of help them with that. And those sort of maintenance on the policy.
Got it.
So the distribution of insurance, I mean, as soon as you mention because we throw a lot of words around, right, in our videos: wholesaler, broker,
agency,
carrier, and then people are gonna see that and I'm like, oh, I don't know what that is, and that's what we're doing today. Today we're breaking it down. And the way that I would most simply explain it really is just like, if you want a book, you go and you're like, I want to buy this book, whatever. You're going to go to Amazon, but a person at Amazon didn't personally write that book. So, in this scenario, we're Amazon, we're the agency. We contact the publisher, which would be, in our case, the broker, right? The broker is the kind of the connect between the underwriter and us in a lot of cases.
Us being who?
Yeah, us, the agency, our connection to underwriters out of the state, right? Which would mean like Lloyd's of London, which is the biggest insurance carrier in the world, right? We can't directly go to Lloyd's of London and be like, hey, we want a policy.
And how come we can't do that?
It has a lot to do with state legislation and every
state is different. Yeah, I do know that much.
Every state is different. So necessarily just because there is an insurance company that is licensed to be in Florida, and it's not that they're not licensed, but their rates are registered with the state of Florida.
Yeah, like a flooding policy in Miami, Florida is probably going to cost you more than a flooding policy in North Carolina.
Correct. And it's mostly
and our flood laws are completely different too. And that's a weird analogy to use because of the fact that flood is mandated by the.
Flood's a different type of thing, but you're on the right track in that. If there's a company here in Florida that is registered in Florida, meaning that they registered their rates here in Florida. What does that mean? Like, we want to charge this much per policy. They have to file with the state of Florida and get approved, and there's that whole process. Now, what happens is Lloyd's of London, which is a global company, is not going to have different rates across different states because there's different laws. Right. So they're going to have, they write their own policies and they say, okay, you could get through us through a broker. And then the broker just goes through the accreditation process in the state of Florida.
Yeah. Getting the license of 440, whatever, the 220, whatever it is.
So they go through the accreditation process and they say, okay, we're accredited in the state to operate in the state, but we could go out and get you policies from Lloyd's of London and different underwriting companies outside, different carriers outside the state. So really you're getting more options, because what happens, and what the guys have explained before, is that when an agent has only 1, 2, 3, 4 companies that they work with locally, they will try to kind of instill uncertainty in the client and be like, well, these companies are accredited in the state of Florida, but it's
which sounds fancy and sounds like
exactly
more important than it actually is.
Correct. So it's a false narrative in that, like, they're giving you a false sense of security. It's like, hey, we're accredited, and that other quote, even though it's cheaper, they're not assured by the state of Florida. Because the other thing is, if an insurance company does go kaput, state of Florida will cover it, right? They'll come
I
in
didn't know
and
that.
yeah. So they'll come in and it's accredited by the state of Florida. So you're like your claim is kind of guaranteed. It's
By the
backed.
government.
Correct.
Got it. I
Whereas
understand that.
yeah, but whereas Lloyd's of London policy isn't. But the likelihood of Lloyd's of London going belly up is as likely as General Motors. It's just not. Uh,
Well,
yeah, yeah, but like General Motors was considered too big to fail. If Lloyd's of London is going to go up, the English government is going to do something about it because it's just too.
correct.
It's not.
And to be fair, it's what you and Fernie always say that. Well, you said this earlier today. It's a
Yeah,
little bit of a hot take, but it is true that insurance was the only industry that was not affected by the Great Depression. Insurance,
correct.
Fernie always says, it's kind of fail-safe.
Yeah, because everyone's always going to need to protect their assets, no matter what their assets are. You get what I'm saying?
Correct. Yeah.
You might not have as much assets as you did 10 years ago, but you still need protection on it.
No, I totally agree with that. Now, so let me see if I get this straight. You have consumer. I'm the consumer. I'm going to go to my agent. My agent's going to go to a carrier, and that carrier is going to go to a wholesaler.
So no, so the way so it's actually, think of it as two branches of the same tree, right?
Okay.
So here is the state approved carriers, and here is you're going outside the state. So here you're gonna go agent carrier. It's direct, right?
When it's accredited.
Yeah, you're correct. So it's like direct. So I'm the agent. I contact the carrier, and the carrier provides me a quote, which I then present to the client. Done deal. Tag
Okay.
team, right? When you're going to get a Lloyd's of London, or you're going to go outside your state to get you have to go to.
But in what scenarios am I going outside of my state, though?
It depends, because the state.
Or is that something that the agent is saying, hey, I have other options that are not.
Correct.
And so that's pretty, like, I know us at JAG, we pretty much have a relationship with almost every carrier that is worth their skin of anything. So some of those are accredited and some of those are not. So essentially what you're saying is that all an accreditation is one company is backed by the state government and the other one is not. Now, on paper, it sounds like the one that's backed by state government would be the better option. Why is that not always the case?
Well, because you like they register their rates with the state and all that type of stuff, but that doesn't mean that they are a financially stable company, right?
And that's what we see a lot in the industry, where Doug always mentions it, how a lot of these state accredited companies, they're accredited, but they don't have, like, if they take a hit, they're going to go under. And how many insurance companies that are accredited get sold and bought and sold and bought and sold, and it just keeps bouncing. So you kind of have, you don't have like this longevity, this kind of like, here's an example, like the Yankees are not going anywhere, you know what I mean? But, you have these smaller teams that are, not that that's a bad example, but you get what I'm saying. It's like these bigger companies that are not accredited, well, we've been here forever and we have the money to prove that we're here to stay. They have staying power is the what I was looking for.
Yeah, and you have to understand that Lloyd's of London is also, and I keep using them because they're the big, the big dog, but they are not entirely dependent on one source of income. Meaning they're not only depending on homeowners policies, which a lot of carriers in the state of Florida do. They strictly do homeowners policies, and that's
strictly GLI, or they strictly okay.
So then a big hurricane hits and they're paying out everyone, and that's it, their default. It's done. Who is your policy going to be with next year?
Which is why a lot of these companies get sold.
Yeah.
And bought and sold and bought and sold and bought.
Yeah. So, and then Lloyd's of London is insuring freight carriers. They're insuring like individuals, like celebrities, like,
well, like, Lloyd's does everything.
Exactly. So if you are given an option and then someone's like, yeah, but they're not accredited, I mean, that person is banking on you not being knowledgeable. That's what it is. They're banking on the fact that you don't know about insurance, which really, fair assessment, right? Not everyone's gonna, like, we're inside.
I wouldn't, if you would have told me before I worked at JAG, like, hey, they're not accredited, I'm like, oh, that sounds like a big deal.
Yeah. You're
like, let's get this straight.
Yeah.
Insurance companies could either be accredited or not accredited, right?
Yeah.
Insurance companies that
are
or
not admitted is like the technical term.
Admitted or not admitted, right? So if I'm an admitted carrier, an accredited carrier, essentially that means that I am backed by the state's government.
Yeah.
In case I default.
Yeah. if you default, the government will like, they'll kind of step in and make sure that your claims paid out if you have like a pending claim or
Make sure
something.
that everything is correct.
But you have to think about like, okay, what's the process there? If a carrier goes belly up and then you have to depend on the government to come and pay out your claim,
Correctly
like
pay out your claims.
exactly, like what is going to be the process of them getting just someone to examine the claim, look it over, like just the backlog, of something. If like someone goes belly up because a Katrina hits, God forbid, but like a Katrina hits and then a whole swath of Florida is like down, and then this carrier is like, well, we don't have enough capital to pay out.
We're done. We
Yeah,
defaulted.
We'll pay out what we can, and then the government steps in. Well, how long is it going to be? Like, how long are you going to be without a roof?
So you're telling me that companies that are typically, these insurance companies that are typically not accredited, they usually have a stronger financial backing.
Correct. And the claim
Usually, let's not say always, but usually.
You don't want to say anything 100%, but like these non-admitted carriers have just a stronger foothold, just because again they it's diversified, right?
Simply put, they have the capital and the longevity to prove it, to withstand a Hurricane Katrina.
Correct. And of course the market, as Fernie says, the market's getting harder, and that's true.
Which let's define what that means for our viewers. When Fernie or when we say the market is hardening, it essentially means that the insurance companies are being stricter with what they're writing, and they're probably charging more premium because of the amount of losses that they have. So when we had the California wildfires, that market hardened big time because everyone was like, we're not going to write any more business until this whole thing is done because we're paying out a ton of claims in California right now.
Exactly. And with coronavirus, seeing that a lot more. I mean, Wimbledon made headlines because Wimbledon was the only major sporting event to have pandemic insurance. They got paid. Yeah. They got paid out over 20 million, I think. It wasn't compared to the profits.
Oh man, whoever their HR or their benefits is cashed out there, huh?
Yeah. So, but obviously it didn't match what they would have made if the event had gone on. But
mitigation. Insurance is mitigation, making sure that you don't, if there's a loss, you don't lose everything. So last question for you here. I know that we were gonna position this conversation as a big, more focus on the distribution of insurance, and we kind of naturally went to accredited and non-accredited. But this is a topic that we always hear the partners always try to tackle. So I think that it's cool that we stay here now. So let's just recap real quick. Accredited just means that that insurance company is probably backed by the state government.
They're filed in the state that they're operating in.
So
they have the blessing of the state.
Meaning that if they default, meaning that if there's a huge catastrophe and they pay out all the claims and there's just no more money to pay claims, the government will step in, that company will dissolve or get sold, and the government will try their best to pay everything back, the claims out. A non-accredited company would be they're not blessed per se by the state. However, they most likely have a strong private financial backing of themselves. Now, last question for you, Juan. Why do you think it is that a lot of agents position accredited insurance companies as like, hey, we want to push you to like, because that's the thing that Doug always fights against, where it's like, dude, like, just because we have agents telling people, well, we're accredited, or if this company's accredited, it's better. Why do you think that happens? Is it easier to get certified with these carriers? Why do you think that's a common thing?
Well, I mean, if you're appointed in the state of Florida and you're selling insurance only in the state of Florida, then you're entirely dependent on, these Florida agents, right? So you're, and that's just an example because that's the state we live in.
Correct.
But the fact is, it's almost because these agents don't have all those options, right? We're really blessed because the partners have been able to cultivate relationships with a number of carriers, a number of brokers. They have solid relationships with all these people, right? But it's not like you get appointed, which is the word that people use, but like it's not like you could have access to those people right away. We got access to those people because of the reputation that we've built over the years.
Yeah, over 10 years.
So if you're an agent and you're just starting
out, longer, right? It's longer than 10 years, right?
Yeah, I don't keep track of time anymore.
Sorry, guys. It's probably longer than 10. I'm pretty sure it's around 15, but let's just keep it around that range. It's been a while.
keep them younger. But like they, if you're an agent who's been at it for a year or two, and this is why a lot of agents, start out in a State Farm or a Geico or something of that,
Progressive something.
because
Which, to be fair, those are not accredited, correct?
they have to file in each individual state. So if you're a Geico or Progressive, you do have to file. Like they do file
But
usually.
is Geico an accredited
Yeah,
insurance
they
company?
are. They are. It's a different situation with them because they're so massive, right? And
Yeah, and they go directly from directly to client.
yeah. So it's like
Typically.
if you go into a Geico is probably underwriting your policy, and they're like vertical integration. They are every step of the process is Geico. But we do business with Progressive, us personally, because they're different. Um, but if you're an agent who's been at it for 2 years, you're an independent agent, or you're with an independent agency, you have to go with the options that you have, right?
Yeah.
Like if you own an Italian restaurant, you're not going to offer someone a taco. You can't make a taco in the back. You get what I'm saying? Like,
yeah. I get what you're saying fundamentally. Unless
yeah,
you're breaking new ground, fusion,
yeah,
Italian, Mexican fusion.
yeah. And more power to you if you do that. But like again, and I guess sticking with that metaphor, like JAG is more of a buffet where you have all these options, but some people don't. Some agents don't have that. So what are you going to do? Are you going to be like, hey, and this is not knocking anybody, right? But are you going to be like, hey, yeah, that non-accredited policy is better than mine because that company has more money than the company that the only 5 options that I have that I could offer you. You're not
Correct.
going to do that. As an agent, you're going to play whatever cards you have. And I'm grateful that we work for a company that values transparency and will say, hey, you know what, like you're what you need, we don't have that product, or this is the product that we have, the best that we have. Maybe you should stay
Or maybe the product that you're looking at isn't even the right product.
correct. So it's just like we're not going to sell a policy just to sell it. It's because the insured needs it, and other agents, again, not to disparage anybody, I'm not saying that everyone besides
Yeah.
just not good, but you're going to work with what you have. It's like building a football team. What's stronger, your defense or your offense? You're gonna
Yeah, you're gonna just your game plan is, if I have Saquon Barkley or if I have, a rookie running back, I'm gonna plan my offense differently because I have I have options here. I get that.
Mm-hmm. So that's really the reason why it's even a debate, because it really shouldn't be a debate. Really, you should look at accredited and non-accredited companies and see what best fits your client. Like, what's the best fit for them? Rather than like disparaging one over the other because you don't have access to one.
Correct.
Right? And if you're an independent agent, or if you work for an independent agency, then what you should do for your benefit and the benefit of your clients is be like, well, I'm going to go try to get appointed with this other carrier. I'm going to try to get an appointment with this company or this broker so that I have more options. Because I think what a lot of people don't understand too is, even if I'm like, hey, you know what, that company is not appointed with the state of Florida, so they're not, you might not want to.
They're not accredited or admitted.
Yeah, you might not want to be with them. Well, I could go on my phone and be like, okay, Google it, and be like, oh, but it says here it doesn't matter. People, you're gonna get found out. Like it's just not.
Do you think that most clientele are doing the research?
I don't. I think unfortunately, insurance has either been, if you want to call it lucky, or it's been bad for the industry. People don't really want to deal with insurance, right? They really
Correct.
don't want. They don't. They just want to get it done because their bank is requiring or whatever. And I think that's why our social media is being consumed the way it has been, is because we kind of try to be like, hey, listen, this is the information that you need.
Yeah.
To understand what you're buying, because it's like again, people buy food. It's not like people go to a restaurant and be like, well, can you list every ingredient in this dish? Like no one is
like, oh, where'd you source your dairy from? And it's like, all right, bro, I don't know.
Yeah, exactly. It's just like you can't expect a client to go that in depth into it, but you could give them the resources that they need to make the right decisions for themselves.
That's a good one.
So,
Very good.
yeah, yeah. It doesn't have to be like, well, I used 1/4 whatever to make this.
Yeah, you don't got to get into those details, but I totally understand where you're coming from. So, well, I think that kind of sums up the big debate between admitted and non-admitted, aka accredited, not accredited.
Mhm.
Um, in a nutshell, it doesn't matter as long as you have the best solution for you and your needs. If it comes from an accredited insurance company, then okay, great. And if it doesn't, also okay, great. And one of the main, going back to what we're saying, just to recap, the main differences is that one is just blessed, or it's appointed by the state, meaning it's backed by the state, that if something goes wrong, the state will help recover from it. And the other one is not. But even though that sounds bad on the surface, reason is that they probably have the financial backing and the capacity to take on a hit where they don't need the government's backing. So, Juan, thank you again. We just want to dispel the whole notion of not admitted is not as good as admitted. Like, you want everything admitted or accredited, and that's a myth. You want what's the best solution for you, and
Right.
sometimes the best solution is based on price. We're big on the fact on the best solution is always what insures your asset correctly,
Correct.
regardless of price. But that's just our philosophy. It's worked for us. But again, thank you, Juan. I think that's it, right?
Yeah. All right. Thanks.
All right, cool. See you guys.